Hello and welcome to the CFO Weekly Newsletter. Thank you very much for joining me. Well, very interesting what has happened over the last few days in the market, and let's delve in and have a bit of a look. Let's go to the charts first. That's a good place to start. Always want to start with the SPX. That's the best gauge of the overall stock market. And I've been looking at the SPX here, and we've been consolidating within this trading range. Now, as of the last couple of days, we have now broken above that trading range now, and this is obviously a bullish sign. We've broken above this significant 4,000 level, which is obviously something that psychologically is important for the bulls, and that is another development that has occurred there as well. So breaking out of this trading range, breaking above the 4,000 is certainly bullish. If we have a look at our 92% accurate opening range, now before I do that, let me just change this. I was looking at something before, different type of price action. So if we have a look at this, you can see right now that we have measured the low and the high from Thursday. Obviously, the market was closed on Friday due to Good Friday, Easter. So we measure the third Friday, in this case the third Thursday, the high and the low. If it closes above that, we're in bullish opening range mode on the SPX. In between the two, we're in neutral, and obviously below we're bearish. So right now we are bullish with the opening range. So that's another thing that is bullish for the market, at least in the short term. A couple of things that I was concerned about with the market. Well, number one, I wanted to see what the opening ranges was going to be. I also wanted to look at high yield bonds because they're a forerunner for the stock market. And I was looking closely at this support level here. It did break below it, but then straight away recaptured that, and very importantly has just moved above the 50-day moving average. So sort of showing a little bit more of a risk-on mindset right now with investors, and this is another bullish sign for the market. Junk bonds, another measure of the risk appetite of the market, holding that trend line and also closing above the 50-day moving average. So quite a few bullish developments just in the last couple of days of trading. So we have a look at the overall market. Just our workspace is probably the best way to do that. And we can now see that all of these indexes here, the S&P 500, the NASDAQ, the Russell 2000, the transports, and the industrials are all above the 21 EMA. This is the moving average we use as a line in the sand on a daily chart between bullish and bearish, and they are all now in unison. A bit of a double bottom there on the Russell 2000, so that's a bullish pattern, but they're all now in unison. So that's normally a sign of a strong market when they're all doing the same thing. So all the different categories or indexes that make up the market are now looking bullish, trading above their 21 EMAs. Now, if we have a look at some of these indexes a little more closely, something that I've been talking about was the NASDAQ. Now, I was starting to get a little concerned about the market, believing that we could have a dramatic move down, and I still believe that in the next couple of months. However, I have to be objective as a trader. I cannot be attached to one story or one viewpoint. I have to trade not the chart that I want, but the chart that is in front of me. Trade what you see, not what you think. Now, something I did identify for all of my subscribers here and my members was this inverse head and shoulders on the NASDAQ. Now, this is now broken above the neckline and has triggered. So this is a bullish sign here, and this is something that we need to be mindful of as well. So, we measure from the neckline to the head, okay, just approximately there, and then we project that forward. So that's projecting a move, getting close to 14,500 on the NASDAQ. So this is definitely something here that is bullish, okay? The NASDAQ was looking a little bit bearish there for a while, having a little bit of a move down, okay? Forming this downward trading range or channel. It's now broken above the 50, broken above the inverse head and shoulders, and is certainly looking bullish here. right? Next stop 14,000. So that's another bullish development. The Russell 2000, like I say, a bit of a double bottom there. Found a support level just there, pretty strong support there. And again, that has now broken back up above the 21 and the 50. So, all these indexes now, just in the last couple of days, have shown us a bullish change in direction. If we look a little bit deeper here, a couple of things that are going on now. We want to look at both sides of this, because very easy to start just looking at everything that's bearish, and all of a sudden that's all you can see is bearish signs. But you've got to understand there's obviously two sides to this market. There's bulls and there's bears. We need to understand that a lot of this is driven by institutional trading. Over 90% of the volume is driven by institutional trading, and there are some things here that we need to understand as far as what's actually going on, right? Look beyond the price action. The price action is very important, but we need to look beyond that as well. Now, we know right now that the market is significantly overvalued, right? The Warren Buffett indicator comparing the value, the market value compared to GDP. Now, right now we're sitting at around 223, which is phenomenally high. Anything here above 115% is significantly overvalued. So 223 is certainly very overvalued right now. Okay, so this is extremely overvalued market. Does that mean that it can't go higher? Well, no, it can still go higher. You've got to understand that. What is going on here? What's causing this market to continue to move higher? Obviously, unprecedented stimulus from the Federal Reserve is obviously something that is significant. And the fact that they're just going to continue to do whatever they need to do to keep things moving higher and to prop the economy up. But also margin debt has gone crazy, right? There's no doubt about that. Traders can borrow up to 50% of the purchase price of a stock, according to Regulation T of the Federal Reserve Board. So, for example, if a stock is $100, traders only have to use $50 of their own money to purchase a stock, so they can borrow the other $50. This is called buying on margin, or the amount borrowed is called a margin debt. So before this past year, the highest level of margin debt Wall Street had was $668 billion. Okay, so we've got 9 zeros is a billion, 12 zeros would be a trillion, so 9 zeros there, so $668 billion in May 2018. That is a ton of money, no doubt about that. But at the height of the coronavirus pandemic, that sort of hit us last February and then really impacted us right until March. The margin debt obviously plunged, obviously fell back quite a bit to 479 odd billion in March 2020, because a lot of traders were obviously reducing the amount of risk that they had in their accounts. What is it right now, though, Sean? That would be the important question. Well, as of February 2021, traders have borrowed a total of $813 billion, over $813 billion, to buy stocks. Have a look at that. So margin debt is certainly a significant factor in this market moving higher. Margin debt and the market up another 1.9% in February. Continues record trend. So you are seeing that correctly. In less than a year, Wall Street has borrowed an additional $334 billion to buy stocks. $334 billion. Wow. So this is, obviously going to drive stocks higher. Traders are incredibly bullish on the market right now, and they are putting their own money in, plus a mountain of borrowed money. They are not just saying this, but they're actually doing it. It is important to realize that the FINRA releases its margin debt data a month after the fact, though. So what we are seeing now, the data I just showed you, is for February. So we'll have to wait until the last week of April to know what happened in March, what the numbers are like in March, but probably going to continue this trend. So certainly a lot of margin debt. People are certainly loading into stocks right now, and Federal Reserve, very accommodative to accommodative, should I say, to the markets continuing to move higher. That's going to help as well. Warren Buffett does say, be fearful when others are greedy and greedy when others are fearful. No doubt about that. Did I last week set up bearish positions for myself and my members as hedges in our account? And not just hedges, but also the ability to make a huge amount of money if the market was to correct or crash. Absolutely. Now that the market looks extremely bearish now, has confirmed that, it looks extremely bullish in the last couple of days. Am I still keeping those hedges on, which I have out to June this year? Absolutely. Absolutely. Right? No one knows what's going to happen next. Yes, right now, for all the things I've just shown you, we are confirmed bullish in the short term. Do I still have those hedges and those investments on that are going to make me a lot of money if the market crashes before June? Yes. Okay, I'm still keeping those on. However, I've got to trade what I see and not what I think. So right now, even if a lot of my research is telling me we've got to be concerned about the market having a potential pullback, and again, this is not trying to promote fear. I mean, it's very, very normal if you look back at any sort of history of the stock market to have a 50% pullback is not unheard of. So, that sort of pullback, 20, 30, 40, 50% pullback in stocks, that is going to happen. Obviously, timing that is extremely difficult, but to be able to have hedges in your account and protect yourself and also set up to make a lot of money when that happens just makes a lot of sense to me. Massive selling in the UK, $1 billion worth of UK stocks dumped in a month. Insiders, what are they doing? Well, they are selling right now. Record levels of selling, certainly a lot more than before the pandemic hit. A huge amount of insider selling going on. So, the insiders are starting to position themselves for the market to move down. But when you have that much margin debt and you have the Federal Reserve doing what they're doing, the markets are telling us that they want to move higher in the short term. We have to go in that same direction. Bill Gates, Bill and Melinda Gates Foundation is the largest private foundation in the world. So this is something that I want to look at as far as insiders, right? Just to give you a bit of an example of some of the things that I look at. At the end of the quarter, the portfolio of the Bill and Melinda Gates Foundation contained 21 stocks with no new holdings. It was valued at $22.34 billion. Now, what has it been doing just recently in the quarter just gone? Well, Berkshire Hathaway, they sold 10.61% of their shares, or 5 million shares there. They sold all of their Alibaba, right? BABA being the ticker there. They sold all of those, right? Sold that entire holding there. Apple sold 50% of what they actually owned, 1 million shares. Amazon sold 50% again. The one acquisition they did have was SDGR. Now, if we look at SDGR, let's have a look at this. SDGR. Back here is where I saw, through the use of Form 4s and when they do lodge these with the SEC, I saw $129 million worth of stock being sold before a significant move down. Just now, nice W bottom here with the chart here. Just now, they've actually accumulated stock again. So it'll be interesting to see. It does have a gap to fill overhead here, so that's something else that we need to be mindful of. Maybe we will see a move higher there, but certainly that is the only stock that they have added just recently. Now, as far as insider buying going on, ADV is one that I saw here. We've got the director, CEO, CFO, Chief Operations Officer, the CFO of North America, all of them sort of buying up here with this particular stock. I'll show you this one. Where is it here? ADV. Nice bull flag here, right? So just broken out as of yesterday's price action out of this bull flag. If we project that, the length of the pole forward, that takes us to around $15, okay? So length of the pole, which would be from 12 down to 9, huge insider buying or a dramatic amount of insider buying could cause this stock to move higher. Potentially they know something. Obviously it's going to have some issues getting beyond this pivot here, but the flag projects it going to around 15. So that's just something that I saw there. a lot of insider selling going on with this particular stock, right? We've seen this one director selling 100% of what he owns, but also this institution selling 100% of what they own as well. Quite a significant amount. So let's have a look at this stock. This is one that I would put on a watch list. I've seen a head and shoulders pattern here. Hasn't turned over yet. Now, if it goes obviously beyond the height of the head, it's invalidated. But if it does start to roll over before there, which is around, what's that? Around 43.50, somewhere around there. If it does start to move down before then and breaks 35, the neckline, this could be a very good potential trade to the downside, a bearish trade. So I've got that on the watch list, simply just setting an alert at $35. If it does break there, I'll look to set up some sort of bearish position on that along with the insider selling. So insider selling along with the price action here, the bearish charting pattern, head and shoulders, if it does form, if it does break 35, that's just one I've got on the watch list with an alert set as well. This one here, MRKR, 14 different insiders buying up in the last 2 weeks. So this is interesting, right? So we've got sort of 10 million here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. About 100 million, about $110 million worth of stock being bought up in the last couple of weeks. Let's have a look at the stock. MRKR. Not a lot going on right there. Obviously, there is a support level there around $2. We've got the 200-day moving average there, and that sort of appears where a lot of these, just about all of them, except for last year, that was bought at $4.62, all being bought at $1.75. So that is below that's a pretty good level there, right? And below the 200. So anyway, that's just something interesting that I saw there. A lot of insider buying going on there. Now, another thing that I did see, which is obviously another bullish sign. Well, let me show you this. If I just look at the SPX, all right, let me just get rid of volume for a second. Okay, if I go here and I go to quarterly, right? So every quarter. Now, I take this back as far as this charting software will let me go, which is obviously back to around the 60s. And then what I want to do is I want to add an indicator down the bottom here. So let me just show this to you. I think you might find this interesting. CCI, which is a commodity channel index. Okay. Now, what I want to do is I want to put a line here at 200. Okay. So I'll just put this at 200. Now, this has happened only 6 times. I think it was 6 times in the last sort of 100 years. If you're getting the commodity channel index above 200, you tend to see a very big move up in stocks. We've seen it 1, 2, 3, and just now 4 times. It's happened 3 other times in history. So I think it was 1951, 1955, 81, 84, 86, 95, and just now in 2021. So this is something that doesn't happen very often. It's a very bullish sign for the market. And traditionally, we would see a pretty dramatic move there. So we finished the quarter, and this commodity channel index is above 200. That's normally a very bullish sign for stocks. So again, something that's only happened just now. That's 7 times in the last 100 years. That is something that is obviously very bullish as well that I noticed. So there are some very bullish signs short term. Do I still have my bearish positions on like I said before? Yes, right? But I will be looking to make money short term. I'm not just going to be sitting on the sidelines waiting for something to happen. I will certainly be setting up some positions in the short term to potentially make money as this market moves higher here. Now, if we have a look here at Bitcoin, I might just have a look at it on this chart here. So, Bitcoin making a bit more of a bounce here, above 52.95 here with this ETF that tracks it. RIDE is an interesting one that we're looking at right now. If I have a look at it here, we can see this trend line here. I think if we can close above that, sort of get above 60, getting above 60 would be significant. That would be a trigger for me to want to get long RIDE. Now, RIDE is a pure play on blockchain, Bitcoin, right? And I would be very interested in that if that did occur. I think that semiconductors now, that we've now got that breakout, that inverse head and shoulders on the NASDAQ, I think semiconductors, looking for potential ideas in semiconductors. And you can see, a lot of these stocks are really starting to break out now, right? You can just looking at just a couple of those now, really starting to make some strong moves. And that would be probably an area that you might want to focus on. One that I do like the look of is NVIDIA. Probably just setting up something very conservative for now, okay? Setting up some sort of position there, probably going at setting up an at-the-money call debit spread, something like that. I mean, let's just have a quick look. I'll just show you guys this. I'm not going to show you too much, otherwise my members will get upset. Just quickly, I'll show you this. The skew, which I've spoken about a few times, that's now pulled back a little bit. It's at 139, still above 135, which shows there is still some fear with the smart money. The market's likely to have a correction or a crash. Actually measures a crash. The 2 standard deviation move to the downside. Anything above 135 is bearish, but it has pulled back from around 146. Combined put-call ratio, the 10-day moving average there, that is 0.8, so that's neutral. That's not really telling us a lot at this point. We look at the futures market. It's down a little bit, but nothing significant at this point. So not a lot to sort of be gained from there. We do have Facebook, just quickly, before I show you NVIDIA. Facebook having earnings coming up in 3 weeks, so we will set up an earnings trade on Facebook. If I just show you Facebook, this is something I'll set up with my members now. We've broken out of this trading range here. If we look at the stacked moving averages to determine the trend, we can see the 8 on top of the 21, 34, 55, 89. When they're stacked in that sequence, that is an uptrend, right? So breaking out of that trading range, stacked bullishly in an uptrend, earnings coming up in about 3 weeks. They are some of the criteria we use to enter a earnings trade or set up an earnings position on, in this case, Facebook. So that's another thing. Now, back to NVIDIA. I think semiconductors will do well going forward. NASDAQ breaking out of an inverse head and shoulders. That's one of the reasons here. NVIDIA, that was, had a significant pullback below the 200, found some support at the 200, and is now broken above the 50. Okay, so there's some of the reasons why I'm looking to just set up a very conservative call debit spread on this. Now, what I typically like to do, I'll just show you this. Again, I can't show you too much because you get upset with me here, but if I go NVIDIA, okay, probably setting this up for the May contract, so the monthly, 21st of May here, okay. Now, what I like to do with these is I like to set them up with the one I'm buying. So what is a spread, Sean? It's where we're buying and selling an option at the same time. Okay, they've got the same expiry, so this is called a vertical spread. And what I like to do is sell one at the money or maybe just slightly out of the money. And the other one that I'm buying, I want to buy that so it's in the money. Okay, so right now, if you go back and have a look at NVIDIA, it's trading at 559.50. Okay, 559.50. So if I looked at this right now and I said to myself, well, this one here, the 560 call that I'm selling is at the money. What's the stock price again, Sean? 559.50. So the at the money option would be the 560 strike call. The option that has the most time value is the at the money option. So I want to sell the maximum time value here to help pay for the purchase of this in the money call option here. Okay, so it's in the money. It's a delta higher than 50, 55. Okay, and then the at the money would be as close to delta 50 as you can get. In this case, 52. So in this case, I can purchase this spread. I can buy this call debit spread for $257, right? $258 a contract. Okay, if I was to set up one spread, buy one spread. Now, for me, that's a pretty good deal because you think about this. One way of doing, well, the way I like to do it is make sure I'm selling the maximum time value possible, which the at the money option is always the maximum time value, right? So I sell the at the money option, maximum time value, which helps pay for the in the money call that I'm buying, okay? Now, if I have a look at this, if I was just to buy this 555 strike call on NVIDIA, how much intrinsic or real value does that have? Well, let's have a look. So 555, okay, right now it's trading at 559.50. So it's got $4.50 of intrinsic value. Intrinsic or real value. Sean, how did you work that out? 559.50, which is where the current stock price is, minus the strike price of 555, the one we're buying, shows me that this particular option here, at the moment, has $4.50 of intrinsic value. So one of the ways you could look at a call debit spread is really you're using this sold option to pay for buying this call option here. So am I getting this call option that I'm buying in the money at a wholesale or a discounted price? Well, yes, I am, because the intrinsic value of this 555 call is $4.50. I can purchase this spread now for around $2.57, $2.58. So that's a pretty good deal, right? So, that's just some of the things I would look at. My break even, $2.57 would be how much it would cost me. $2.57 on top of this. So, you add the cost of the spread on top of the bought strike. That would give you a break even. So another way to think of this, right, is that you are long NVIDIA at 557.50. Okay, so that's another way of looking at this. Okay, it's because if you've got your strike there of 555, okay, plus 257, okay, you've got to understand that really what you're doing here, or another way of looking at this, is that you are long NVIDIA at 557.50. That would be another way of looking at it, right? So a couple of different ways of looking at this call spread, but for me, that's a pretty good value spread right now. I like the look of NVIDIA. I think the inverse head and shoulders on the NASDAQ, and I think the bullish signs that I'm showing you there, I think we're going to move higher in the short term. I still think there's some pain coming up for bulls in the next couple of months, but right now I've got to trade what I see and not what I think. And for me right now, in the short term, I have to be bullish. So I'm going to set up some positions with those ideas in mind, and we will see what the market gives us. I mean, did anyone get into that trade that I mentioned to you last week, which was Mara? What a ripper trade that was. We made 111% return on a spread, like I just showed you there, in 2 days. In 2 days, it was an absolute ripper. So anyway, that was a great trade. I think we've got some fantastic trades set up this week for our members. We should make some pretty good money this week, and I'm going to go do that video right now. So I hope you found this free CFO weekly newsletter helpful. Let me know if you've liked the new microphone. I've bought a professional microphone now, so my voice sounds a little more clear. Apparently before, the feedback was can't quite hear you all the time. So let me know if this is better now with the new microphone. If you like the content and if you enjoyed that and you want me to keep doing it, send a support email, please, to support@cashflowoptions, all one word, cashflowoptions.com.au. Send us your feedback there. Let us know if you'd like us to keep doing this. Let us know what you thought of the content, and we will talk to you all again next week. Thank you so much for listening. My name's Sean Allison. All the best, and bye for now.